Studio. Pallavi, we're looking at how the tariff strike might impact India's economic growth. Give us all the details on that.
Right. Now, broadly, the growth in India's GDP can see some downside risks. We will also likely see some widening of the current account deficit. So far, what we know is the 25% tariff rate, along with the penalty, is definitely a negative development, and more so compared to lower rates for other emerging market peers such as Vietnam, Indonesia, Philippines. Let's remember that all of these economies compete with India in very similar categories of labor-intensive products as well as electronic goods. And so far, we were seeing a competitive advantage compared to these countries. Now, with the revision in tariffs, that's gone. What we're also going to be watching out for is more details, specifically on items that were previously exempted and items which enjoyed differential rates. Now, on the current account front, how India trades in crude going forward, where it now imports crude from, and at what price will influence the current account trajectory. On the positive side, however, let's remember that any kind of a rushed deal would have compelled India to give concessions on the agriculture front, and this would have had far greater ramifications from a slightly longer term perspective.
Right, Pallavi, thanks so much for that update. Trump's tariff hitting the rupee and, of course, giving us that macro perspective. It remains to be